Okay, good morning. Before we get started, I want to say if you're physically in class, you can see an extra person up front. This is Rachel. If you're online, Rachel is online. She's she's sitting with Haley. Haley is showing her the ropes because Rachel is graduating from the undergrad program right in a week or so, in August. Okay, and she will, as far as we know, be my GA for fall. So this week Rachel's in training. So you'll see Rachel this week in addition to Haley. So that said, it is our last week of class, which I cannot believe, and we're going to get started. There's a question out, Learning Catalytics, that relates to last week's material. Of the three types of business activities reported on a statement of cash flows, investing are the most important when evaluating a business. I'm going to go over the answer here in a second. I'm not going to close the question like usual. It'll stay open for a minute or two for people coming. Can you show me where we are so far on that one? Oh, 95% correct. Awesome. Okay, so this will be open for another minute or two, but this is false. The most important cash flow when looking at a business, evaluating it, are operating cash flows, because we want to know, can the business generate enough cash from its reason for being to stay open. So the operating cash flows. So that's awesome that so many people got that right before I put up the answer. And this question will remain open for a little while. Haley will close it at some undetermined time before we have another question sometime. And that brings up another point I wanted to say. I got an email late last night. I haven't had a chance to respond to it, and I'm going to respond to it verbally to everyone. So the email that I got, I guess I could have read it. I could read it. The person, and I think a lot of people have this question, so that's why I'm just going to respond to it in class, and hopefully I can find it. The person was asking about the Statement of Cash Flows chapter. Of course I cannot. Oh, here we go. Okay, so I'm reading this email. If it's your email, here's your answer, but here's the email. I have begun preparation for upcoming exam. That's great. And I'm having some trouble with chapter 12. The Statement of Cash Flows has so much information and my brain is having trouble making sense of it all. I understand. I was wondering how much depth I can expect to get into with this particular statement. Should I memorize all the possible activities which can affect each section? Operating, investing, and financing? That's good. Those are the three cash flows. It is confusing me a lot about which things belong in each section, as well as which things should be added and which should be subtracted. Okay, so I thought that was a great email, and I thought a lot of you would have similar questions. So I'm going to address this about chapter 12. First of all, there's three types of cash flow activities. The operating cash flows, I'm putting the template for that on the exam reference sheet. It's already there. If you go into exam information, you can see the exam reference sheet for exam 3, and that is on there. So in terms of memorizing what's on that section, you don't have to. And it has a plus and minus in front of it, so you're good there. You've got that. You should absolutely know what types of cash flows show up on investing and financing. The ways to remember that is investing is anything to do with long-term assets, and the financing activities are anything to do with liabilities and stockholders' equity. So you need to be able to identify where something goes. Now, in terms of whether they're added or subtracted, if it's the operating section, that's the easiest for you because it's on the template. There'll be a plus or minus in front of it. It tells you that. So that's a big chunk, and that's the chunk I think that's the hardest to understand. For operating and financing, for every one of those, if you get one, you look at it and you say, is the company getting money or is the company spending money? So that all you're doing when you're asking if you add or subtract it is you're saying, how was cash impacted? So if we bought land, so cash went out, so that would be subtracted. If we issued stock, we gave stock out, people gave us cash, so cash would be increased. So you look at, for financing and investing section, you look at what happened to cash. Did it go up or did it go down? So the question is, what happened to cash? Operating section, that one is just based on that template and use the items I've given you in the template. So I think I addressed the email. So Chapter 12, if you want an idea of what Chapter 12 is like, you can also click on Study Plan and buzz through Chapter 12 on there and see the kinds of questions that will be on the exam. Okay, so there's that. Okay, so the final exam. Speaking of final exam, Exam 3, Chapters 9 through 13. It is Monday, 9 a.m. through Friday, May 7th, finished by 12:30. Remember that exam is going to automatically submit at 12:30. If you started at noon on Friday, so 12:30 p.m. is 30 minutes after noon. Don't get confused about the a.m. and p.m. But if you started at noon on Friday, you only have 30 minutes before it automatically submits. So it's not start by 12:30, it is going to finish by 12:30. So I would, waiting until Friday is a really, really bad idea on several fronts anyway, so do it before Friday. Sections 1 and 2, this is 1 and 2 only. There are a couple thousand exams being taken in the computer lab this during finals week. So there could be lines. So, and I emailed sections 1 and 2 only. This only applies if you take your exam in the computer lab. Because of this possibility of long lines, if you're just saying, I don't want long lines, I want to avoid this, they are opening up the Proctor Lab on Sunday before finals week. They are opening up, and this is where you can feel special, they are opening it up from 8 a.m. to 4 p.m., but the only people in there Sunday morning will be my class. Okay, so they're opening up just for us. So if you want a time where you can go take it, it will not be busy, there will not be lines, go on Sunday. It is absolutely not required that you go Sunday, but you can, if you can start your exam in the computer lab 8 a.m. to 4 p.m. on Sunday, should not be lines. It's only our class from 8 a.m. to noon. I will tell you, if you're in sections 1 and 2, that this is an option. The only reason this option is being offered is because of the possibility of long lines. If this sounds attractive to you, by all means take it on Sunday. If you're using ProctorU, there's no Sunday option because you don't have to worry about long lines. You can take it at your leisure. You don't have to worry about proctor hours or other people being ahead of you. So we are offering you a day that there will not be lines. Okay, absolutely. From 8 a.m. to noon, it's only our class. You're welcome to go anytime Sunday. You have to start your exam. They will not let you start your exam after 4 p.m. on Sunday. If you rush in right at 4, you can still take it. They'll sit with you until you finish it, but you have to start by 4. So this is sections 1 and 2 only. It is only an option because of the possibility of long lines. So you cannot take it. If you're ProctorU, it's Monday through Friday again. But if you're in sections 1 or 2, you have that option for Sunday. And if anyone asks, there is no extra credit available in the class. It is what you've earned. Okay, section 5 and 6, if you've not scheduled yet, make sure you schedule as soon as possible because the selections of times for finals week are quickly dwindling. Okay, so what's due this Saturday? Saturday, homework for Chapter 13. There's an exam info quiz, and that exam info quiz is available now. Should be super easy for you. Practice Exam 3 counts as a quiz, and it is due before you take the exam. Then the other note, for homework the whole semester, you have had the opportunity to do it late, and you get a 10-point penalty for every day late it is. The final cutoff for all homework is this Saturday, May 2nd. There will be no more homework. All homework's done. There's no more homework being done after Saturday. After Saturday, your focus needs to be on preparing for the exam. Okay? So Saturday, May 2nd is the final cutoff for all the homework. There are no days of grace for Chapter 13. Chapter 12 is going to be cut off. So Chapter 13, there's no grace period on it, and Chapter 12 will be done then as well. Okay, what to expect during finals week. So the final exam. A final exam should be similar to your other exams in terms of content and what way you prepare for it. I did want to mention, I've talked to several people about earlier exams. And one thing that does not work really well for preparing for the exam, I've seen people take the practice exam 5 times, because you can take it a maximum of 5 times. And that's good on one hand, but on the other hand, if you're not prepared for if you haven't studied at all, and you just take the practice exam, and you get a 30%, and then you say, oh, that's not good, let me try again, you're likely to keep getting that same score. And that's not going to magically fix things. So taking the practice exam 5 times in rapid succession is not preparing for the exam. What you need to do to prepare for the exam, it doesn't matter if you study plan to do it or the practice exam, you need to use if you don't know how to do something, you need to take the time to work through it. When your practice exam is open, the tools are there for help me solve this, work through the problems, really put the time in, practice it. It's not meant to, let me open it up, try it, oh, that didn't go well, let me try it again. That's not going to make any difference in your exam score, unfortunately. So you really do need to work through the problems. And if you're here at 7:45 in the morning, I suspect you are not the people that I'm preaching to. So anyways, but that's just, you can do anything for 2 weeks. All we've got is less than 2 weeks left in the class, and if you need a really good exam score, your best bet is to be in study plan, practice, 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 work through it. The help me solve this takes the time. I see a lot of people rushing through, and I know what that's like. I know the temptation is to try to shortcut it. There aren't any shortcuts, and so work through it. Okay, so what to expect during finals week. Your 3 lowest quizzes will be dropped no later than Monday, May 11th. Why do I say that? That's the week after finals. Because the practice exam counts as a quiz. I cannot drop the quizzes until all the practice exams are done. So my hands are tied. I cannot drop those. I say Monday just because our exam goes Friday. I'm actually at a conference Friday. I'm going to try, when I tell you Monday, chances are it's going to be Friday, but I'd rather tell you later and not have your false hopes built up like she's going to do it right now. So 3 quizzes will drop no later than Monday. The quizzes absolutely will not be dropped before Friday afternoon of finals week. So don't send me an email saying, when are quizzes? Well, you can if you want, and I'll be happy to refer you back. But the quizzes, the 3 drop quizzes, they will happen Friday or later at finals week. I have to wait for the practice exams, and I can't drop quizzes on an individual student basis. I drop them all at once. So that'll happen Friday or later, Monday at the latest. And I'll send you out an announcement once I've done that. The other thing that you can tell once I've done that is in My Accounting Lab, if you click on results, you'll see certain scores grayed out. And those will be the ones that have been dropped. And I always get this question every semester about what if I don't want any scores dropped. It never will hurt your grade to drop a quiz. It's not like you're getting zeros in place of them. So yes, everyone has 3 quiz grades dropped. It absolutely will never harm your grade to drop the quizzes. Okay. Okay. Now, again, our final does not finish until 12:30 Friday. Okay. So I can't do anything until after 12:30 on Friday. Generally speaking, it takes me a very long time to do course grades because I look at every individual person's grade. So I go through line by line, look at everyone's grade, make sure that everything looks like it's in there, and I also have to analyze the final exam after everybody's done to make sure everything went as I expected. So I cannot even begin to start on final grades until Friday after 12:30. So again, I'm building in, I'll be working on grades Monday at the latest or sooner, and I hope to have grades in Flash Science sometime Monday or Tuesday. I'm one of those professors that if my exam cuts off Tuesday, I generally have grades in Tuesday night, so it drives me crazy that our exam goes till Friday and I can't get it done. So know that I'm motivated. I know your grades are important to you too. I've watched my own children obsess over, because my kids both graduated from Kent State, obsess over waiting for their grades to be entered in Flashline. So I will do them as soon as I can, but I absolutely cannot start that process until 12:30 on Friday. So that's the earliest I can, and as I said, I'm at a conference Friday, so that'll be a little challenging, but I will get it done as soon as I can. Okay, grades are due for the university, just so you know, across all classes. Grades are due Tuesday at midnight, okay, after finals week. And I won't be entering them Tuesday at midnight, I can tell you that. It'll be done much earlier. So I tell you Monday or Tuesday, hopefully grades are going to be entered. Saturday is my hope. Okay. Then the other thing, so I spend a lot of time doing grades. I make sure that everything looks okay for everyone. That said, I will not adjust a grade for an individual person. There is a grade cutoff on the front of the syllabus, and that you can apply that cutoff. So let's say you finish the final exam, you look at your overall course grade by clicking on results and then overall score, and you compare that to what's in the syllabus. That is your grade. That is your best estimate of your grade. I will have no better estimate of your grade other than if you do that. I do not bump an individual student's grade. So if you write to me and say, I worked really hard this semester, I'm only 0.2 away, will you bump my grade? I will not bump any individual grade because that's not fair. When you look at my grade distribution, no matter where I put those cutoffs, there will be someone that's right on the bubble. And to be fair to everyone, it wouldn't be fair if I said, oh, because you emailed me, I'm going to bump your grade. Because what about the 5 people who didn't email me? That's not fair to them either. So here's what the deal is. When you finish your exam and you click on overall score in My Accounting Lab and compare it to the syllabus, that is the lowest grade you'll get in the course. Okay, that is most likely your score, a grade in the course. That is, but after that happens, remember I still have to drop 3 quizzes, so that'll happen sometime after Friday at 12:30. So I've still got that to do, so that'll help your grade a little bit. And then as I'm doing grades, if I bump any one person, I'm going to bump everyone that same amount. So I cannot answer. If you email me and say, will you bump my grade, my answer is going to be no. Okay? And it's not that I'm trying to be mean, it's that I'm treating everyone the same, and if I decide to bump a grade, everyone's score gets bumped that same amount. And if you are on the bubble, I understand you're on the bubble, but on the bubble is, I can generally, if you say, oh, I'm right on the bubble for a C, don't give me a D or whatever. Well, when I look at what you've done over the semester, there are several things that you've done that would have made a difference. So it's not just the final exam that made a difference. It's a lot of things at that point. So, and I don't mean to be preaching about this or anything, but I just want to tell you what to expect during finals week and how this all works. Okay. Okay. So again, final course grade shows in My Accounting Lab, click on results and then overall score. And then again, so this is really important to me because I apparently just created 2 redundant slides because it was so important to me. I will not adjust an individual student's score. There is no extra credit in the course. I'm getting a lot of emails, not a lot, a few emails, people saying, can I have extra credit? Can I do a paper? No. Okay, the score in the course, the grade in the course is based on what the expectations were in the syllabus and what you've done to this point. if you're struggling in the course, your best option is to pour everything you can into preparing for that final and have a strong final exam performance. Just a reminder, if you're looking for, again, I've gotten a couple emails recently about what score do I need on the final to get a C or whatever grade. Right before spring break, I put out an announcement in Blackboard about the grade calculator, which is an Excel sheet. You can put in your scores from My Accounting Lab. It'll pop out what you need on the final to get a certain grade. To get to that grade calculator, go into Blackboard, go into announcements, and then scroll back to right around March 18th or so, and you'll see one entitled Grade Calculator. So you can do that to see what grade you need on the final. Okay, I think that's it on my, yes, okay. So any questions before we go on? No, you don't need to make a note of it. Just do the practice exam. John, I had to revise it. I was aware of, somebody emailed me about that, and there's no way I can add to help me solve this to the practice exam, so I took that first one down and put up a new one that has all the aids in it. Okay? So actually, if you took it before, you get another chance. Okay, so chapter 13. So this is our last chapter. And this one is one of those ones that looks long, but it's really not. It has 6 learning objectives, but 3 of them are all tied together. So this chapter is about financial statement analysis. On Wednesday, we're going to look at some real company stuff. Today, we're primarily looking at how-to. So financial statement analysis. The first 3 learning objectives are tied together. It's how to perform horizontal analysis, vertical analysis, and common size statements. They're all kind of related to each other. What we're doing in this chapter is we're saying, okay, we've learned how to do the statements. We've learned what's a balance sheet, what's an income statement. How can we analyze them? One way is to compare items on the balance sheet over time or within the same year. And then further on, let's do some ratio analysis. So that's what this chapter is about. But horizontal analysis. Horizontal analysis is saying, horizontal is how have things changed over time? This is what we would be doing if we'd say, how did sales grow? Did sales decline? How has accounts receivable increased over time? Questions like that. When we do horizontal analysis, okay. When we do horizontal analysis, we have to do 2 steps. We have to compute the amount of change from one period to the next, and then we divide the dollar amount of the change by the base period amount. And I'm going to show you what I'm talking about on the next slide. Okay, so first step. So these are the 2 steps. If you're writing them down, they're listed on this slide as well. So step 1 is to compute the dollar change from 2011 to 2012. So you'll take the difference between 61,093 and 48,077. You get 13,016, and then you get the percentage change. You take the 13,016 divided by the 48,077. So you're always dividing by the base year, the earlier year, and that's how we get the 27.1. And that the big thing is to remember you divide by the earlier year. Because when you get that difference, then you're like, do I divide by 2012 or 2011? You divide by the earlier year. So in this case, I took the 13,016 divided by 48,077. And that's how I got the 27.1%. Okay, so on the next slide, what we're going to do is we're going to do the, we're going to do one of these statements. We'll do a couple. Okay, so on this is a horizontal analysis. I'm just going to do a couple lines so you get the idea. So what we do when we do a horizontal analysis is take the difference between 2 years. So we're going to have the total revenue from 2014 of $1,077,000, subtract from 2013 of $917, and we'll get a change of $160,000. Then we take the $160,000 and divide it by the $917,000. So what we're doing is we're taking the $160,000. Pen's not working today. Okay, it's taking the $160,000 and dividing by the $219,000. Okay, so you're always taking the difference and dividing by the earlier year. Okay, let's do the next line. The next line, cost of goods sold. We'll take the difference between 2014 and 2013. So we'll take $477,000, subtract $408,750, and we get $68,250. So that's the difference. And then to get the percentage change, we're going to take that $68,250 and divide it by the $408,750. So you're always dividing the difference by the earlier year. So that's your rule. Take the difference, divide by the earlier year. And what happens with the rest, I'm going to click through these, it's just the same thing over and over. So I don't think we need to write everything else down, because we're just going to take the difference, divide by the earlier year to go through the rest of these. Okay. So then we get on, so still in horizontal analysis, another thing is we can do is trend percentages, which is part of horizontal analysis. It's taking the base year and setting it equal to 100%. You take any year dollars, divide by base year dollars. What you're going to have to do in here, we're going to do some homework problems, and so you'll see what we need to do. We're going to do a homework problem coming up in just a minute. I have a slide to show this, so let me show you this. Okay, this is Amazon's income from operations. So you want a trend percentage. A trend percentage says, okay, I see the percentage increasing each year, but let's take it all of the earlier year. So when we said we'll take the difference, divide by the earliest year. So what we're going to do here is I'm going to take the 676 from 2012 income, divide it by our base of 2008. So in the last slide, what we were doing is we were taking 1 year and dividing it by, comparing it to the year before. In this, every single number across is being divided by, oops. There. Every single number across is being divided by the number that's furthest out, the 2008. So every number is divided by the earliest year presented. So that's when we look at the trend percentage, instead of just the year before, it's being divided by the earliest year. So what you see is in 2008, they say, okay, 2008 is our base year. So that is where 100% of our sales. Then in 2009, our sales were 134% of 2008. 2010, they were 167% of 2008. 2011, 102%. And 2012, 80%. So we're comparing everything to that base year. So that's a trend percentage. Okay, so we're going to do homework problem. The first one, 13-1. What we're doing here is we're doing a horizontal analysis of revenues and net income. Now the first thing to note, it's asking us for revenues and net income. It's giving us in the table revenues and total expenses. So we need to compute net income. So it's not asking for a trend analysis of expenses. It's asking for revenues and net income. So the first thing I'm going to do here is I'm going to calculate my net income. So I've got to do that all the way across the board. You may want to do it right below the table, but what you're doing is you're taking revenues minus expenses gives you net income. So you're doing that for every year across the board. So we'll do that for 2013 and 2012 as well. So we have just computed net income. That's the only thing we need to do, before we get started, because they're asking us for revenues and net income analysis. They only gave us revenues and expenses, so we had to do a little work to get there. Okay, now what we're going to do first is we're going to say, okay, let's look at the dollar increase. So the dollar increase or decrease from 2013 to 2014 for revenues, it went up by $244. So I'm taking 2014, $20,289, subtracting $20,045, and I'm getting a $244 increase in revenue. Okay, next up, we're going to do the same thing with net income. We're skipping expense because it's not required in the problem. So we're going to do the same thing. We're going to take the difference between net income and the difference between 2013 and 2014. And notice it has minus sign brackets around it because it is a decrease. So you have to watch the sign on these. And we're going to continue across for the percentage increase now. What we're going to do is we're going to take the difference between the 2 years, the $244, and divide by the earlier year, the 2013. So that'll be 1.2% increase in revenue. And again, at the bottom of the slide, I'm putting the calculation for what we're doing here. So we could also take 244 divided by 20,045. I just left the numbers in there so you know where they came from. Okay, and net income, the same thing. The difference between the 2 years divided by the earlier of those 2 years, and this is a minus 3.4%. So that's the big thing, is did it increase or decrease from the earlier year? And if it decreased, make sure you get the parentheses around it. Are you okay with homework? Okay, and then we'll do the same thing now for 2013. Now for 2013, we're going to compare 2013 to 2012. So the first one, we have a 1,596 increase in revenue. And we'll have a 1,358 increase in net income, and then our percentages. And again, we're taking our percentage, the change, divided by 2012 in this case, and for both of those. Okay, so what exercise 13.1 was an exercise of horizontal analysis. We compare each year to the year immediately before it. So we compared 2014 to 2013. We compared 2013 to 2012. Now we're going to do exercise 13.2. Remember that we did trend analysis. Trend analysis is comparing everything to a base year. So you have to watch the distinction between those. These are trend percentages, and it tells us to use 2011 as our base year. So it's giving us the information for 2014, 2013, 2012, and 2011. So 2011 is our base year. So what we're going to do, our trend percentages are always the sales of the current year by the base year. The base year in this case will always be 2011. So we have that sales of the current year divided by sales of the base year. This is for the sales line. So for the first year, we'll take 9,960 divided by 8,410, and we get 118%. So we're dividing everything by the earlier years. And then 2000 net income trend, so going the line right below that, we'll take the net income from 2014 divided by 2011, and we get 155%. So we take that net income of 670 divided by 2011's net income of 432. So the difference between the horizontal analysis, just the regular horizontal analysis, in that case we're dividing everything by the year before it. When we're doing a trend analysis, we're dividing everything by that base year percentage. Okay, and then we would do the same thing for 2013. We're going to take the 2013 sales divided by 2011. Note that we are dividing everything by its 2011 base. Okay, now next one, so we'll go 2013 net income trend, 500 divided by 432, 116%. And then again, we don't probably need to write down the last 2 years, but they're going to work exactly the same way. 2012 sales divided by 2011 sales is going to give us 105%, and then we'll do the same thing for net income. Okay, so when we're doing a trend analysis, we're dividing the number by the earliest year. So every year gets divided by that earliest year on that row. So horizontal analysis is analyzing things over time. So we're either going to do a regular horizontal analysis where we just compare it to the year before, or trend percentages, which are comparing to a base year. So horizontal analysis is comparing things over time. So that concludes horizontal analysis. Now we move on to vertical analysis. And vertical analysis is going to be comparing things within the same year. Now, this is where the big deal is for vertical analysis. There's 2 things that you have to memorize, okay? And they're not bad, but when you do a vertical analysis on an income statement, you divide everything, and my pen's not working. Okay, you divide, I get a straight line delayed. Okay, you divide income statement, this is what I'll do. Okay. What I wanted to show you is this right here. On an income statement, let me just blow that up. The base is total revenue, and on a balance sheet, the base is total assets. Okay. You are going to see questions coming up here about this. You'll see them Wednesday about this. This is the big thing with vertical analysis. When you have an income statement, you divide every single thing on that income statement by total revenue, which is total sales. Okay? So everything, it doesn't matter what item on the income statement it is, it gets divided by total revenue or total sales revenue. Remember, we use sales and revenue kind of interchangeably. On the balance sheet, every single item is divided by total assets. Those 2 items you should have written down because we're going to have questions on those 2 things, or at least one of them. But we'll have questions a couple times today on it, and we'll have questions most likely on Wednesday as well. And that's the big takeaway. Vertical analysis, what is it used for? Well, we can compare companies of different sizes. If we say, boy, Amazon's cost of sales is 75%, but Walmart's is 82%, that tells us something about the operating efficiency. It allows us to compare companies of different sizes. We may want to know what one company's accounts receivable as a percent of sales is compared to another company. Vertical analysis allows us to compare companies of different sizes. You should write that down. Vertical analysis allows us to compare companies of different sizes. Vertical analysis allows us to compare companies of different sizes. So horizontal analysis is just looking at things, how things changed over time, looking at trends. Vertical analysis says what's everything as a percent of sales revenue on the income statement, what's everything as a percent of total assets on the balance sheet. So vertical analysis says let's compare companies of different sizes, because no two companies are exactly the same size, but you can look at their items as a percent of the base and be able to compare. Okay, I just want to point out 2 exhibits in your book that show vertical analysis, and we're going to do a homework problem with vertical analysis. Exhibit 13-4, it's Amazon's income statements, vertical analysis. So when we look at this income statement, row 4, cost of sales, we see that in 2010, Amazon's cost of sales was 77%, 2011 about 77%, 2012 it was 75%. So Amazon's cost of sales over time has declined. So there we're kind of combining both of them. But that is a vertical analysis because everything within each column is divided by that sales revenue. Okay, and then Exhibit 13.5 in your book shows Amazon's balance sheet with a vertical analysis. So vertical analysis allows us to compare companies of different sizes. Horizontal analysis is analysis over time. Okay, we're going to do 2 questions, I think, and then we're going to do another learning objective, and then very quickly get into another homework problem. There's lots of little homework problems this week, but they're fairly small. So, question that's coming up. When comparing companies of different sizes, vertical analysis would be a useful tool. True or false? Okay, on this question, you should have written it down, okay, like a minute or 2 ago. So when comparing companies of different sizes, vertical analysis would be a useful tool. True or false? We're going to close the question in about 10 seconds, so get your answer in. Okay, and that is true. Vertical analysis should be hooked up with different companies of different sizes in your mind. Okay, one more, and this goes back to the other things I told you to write down. Okay, when performing vertical analysis of an income statement, net income is usually used as the base. So look at what the base is for income statement. Is that net income? Is that our base normally? I have a hint on this one. About a minute or 2 ago, 2 minutes ago, I told you write this down. There was a base for income statement and there was a base for balance sheet. Okay. I've not closed the question yet. This is your gimme for today. Any other time I put up this question, you should know the answer. Right now, about 65% of you are right, which is the 35% I'm a little concerned about. Whenever you do vertical analysis, you have to, first of all, vertical analysis, companies of different sizes. But the other two things that you must know about vertical analysis is if you're doing a vertical analysis of an income statement, everything is divided by revenue. Like sales revenue, they mean the same thing. It is not divided by net income. You absolutely must know that. We're going to have a question coming up again. It doesn't matter what I ask you on vertical analysis if it's an income statement. It is divided by sales revenue. The other part of this, it's not on here, but if this were a balance sheet, every single item on the balance sheet would be divided by total assets. Liabilities would be divided by total assets, stockholders' equity divided by total assets, accounts receivable by total assets, accounts payable by total assets. So 3 things about vertical analysis. First of all, companies of different sizes. The base for an income statement is sales revenue. The base for a balance sheet is total assets. Do you close that? Now we're going to do another we're going to do a homework problem in just a second. I just have a couple notes to make. Common size financial statements are, you report only percentages. So we're comparing different companies. We're putting all their financial statements in percentages. So we're doing vertical analysis, removing all the dollars and just looking at financial statements in terms of percentages. And that allows us to compare companies of different sizes. So what common size financial statements allow us to do is easily compare companies of different sizes. We've got the next slide is going to compare Amazon to Walmart. Okay, so common size statements, why do we do it? It's a way for us to benchmark. Benchmark is comparing ourselves to a standard set by others. And what we've done here is we've done the income statement, common size income statement, which means they're in percentages. So it allows us to compare Amazon to Walmart. And what we're doing is we're looking at everything as a percent of sales, so we can see that Walmart's net income is 6% of net sales, while Amazon's is 1.1%. So Walmart is more profitable on a percentage basis. If we just put their dollars up there, it would be very hard to draw any conclusions from that. So common size statements allow us to benchmark. Now the very next, so we're already through 3 learning objectives. That's why I said this chapter goes very fast. Our next learning objective is related to last chapter, so we're not going to dwell on it. I have 1 slide on our next learning objective. Okay, which is statement of cash flows. We did this last week, so this should be a very recent refresh. So statement of cash flows, things we look for when we're looking at a healthy company. Operating net cash provided by operating activities greater than net income. Operations are a major source of cash. Investing activities have more purchases. We're reinvesting in ourselves. And financing is not dominated by borrowing. So those are good things to know when we're looking at a statement of cash flows. Okay, I'm going to wait just 1 more minute and then I'll go on. Okay, I think we're ready to go on. So, short exercise 13.4. What we're doing in this one is we are comparing common size financial statements of 2 companies. So we've got the financial statements given to us, so we need to construct the we don't need to construct the financial statement. I'm like, I don't think we're doing that. So you'll see what we do. So basically what we're trying to do is compare which company earned more net income and which company's net income was a higher percentage of its net sales. So when we look at these two companies, we have Kraft and Claire, and we look at the net income, and it looks obvious to us that net income is higher for Kraft than Claire. Okay, so that's an easy comparison, 2,360 for Kraft versus 1,072 for Claire. But these are very different sized companies. Kraft has net sales of 17,700. Kraft only has 7,869. So we're going to use common size to compare these two companies. So let's, whoops, what happened? Did I put a question right in the middle of this? Oh, nice. I inserted questions right in the middle of the homework problem. That's nice. Well, why don't we do the questions, then we'll start on the homework. Okay, so let's do questions. Okay. Which of the following is typically used as the base in a vertical analysis of an income statement? Cash, inventory, net income, or net sales? Okay, we're going to have about 10 more seconds on this one. Which of the following is typically used as the base in a vertical analysis of an income statement? About 80% of you are correct right now. You wrote this down. The base for an income statement is what? Ten seconds. Over your shoulder. Good? Net sales. And I think I have a question up next if I remember right. So we'll see. Okay, which of the following is typically used as the base in a vertical analysis of a balance sheet? So this was one of the other thing you wrote down for vertical analysis. What's the base of a balance sheet? Have we gotten a lot of answers? Okay. You have about 10 seconds left to get an answer in. Okay. The base of a balance sheet is total assets. Okay? So again, vertical analysis, you've got to know the base of a balance sheet is total assets. Good job. Base of an income statement is going to be sales, sales revenue, net sales. Yeah, those are what you're going for. Okay, so I think we're going to go back to the homework problem now, if I assume. Yes, okay. So short exercise 13-4. So we're comparing Kraft and Claire. Which company earned more net income? We answered that Kraft had more net income. But we can't compare them directly because Kraft also had a lot more sales than Claire. So Kraft earned more net income. Answer to that. Now, which company's net income was a higher percentage of its net sales? So what we need to do there is we are going to be taking the net income and dividing by net sales for both the companies. So for Kraft, we will take, that's a hyphen, not a minus sign, but we'll take 2,360 divided by 18,700 and we get 12.6%. So that's Kraft's common size net income. And then we'll do the same thing for Claire. We'll take Claire's net income and divide by its sales. So what we see here is that Claire's net income is a higher percentage of net sales. So Claire is actually more profitable given its size. It makes more net income off every sales dollar than Kraft does in this example. Okay, now we're going to send another question out. No, yeah, you've got it. Okay, so now we have another question, and this one, the percentage. This one you have to read carefully. The percentage change in financial statement balances, so is computed by dividing the dollar amount of the most recent period by the base period dollar amount. This is referring back to horizontal analysis. So the question is, do we divide the dollar amount of the most recent period by the base period dollar amount? Okay, as you're answering this one, I really didn't mean, you have to be prepared for this type of question, and it's important to read it carefully. And this one I could see where first time through you'd say, oh, that's true. It's false. And the reason it's false is we're dividing the change by the base period amount. The question says, do we take sales from this year and divide by sales from last year? No, we take the change between the two and divide by the base period amount. So we just need to be careful on the reading, that we're reading carefully to pick up the differences. We're going to close this question in 10 seconds.
By base period and subtract 100%?
No, the question is, can we divide the dollar period of the most period and by the dollar amount of the base period in a percentage amount? That would be trend analysis. No, don't do it that way. You have to divide the change by. I know. I mean, you could get. It would be confusing to. Yeah. So. Yeah. No. So yeah, take the change, divide by the base period amount. Okay, and then now the rest of the chapter that we have is all ratios. So we're going to have a current ratio, quick ratio, times interest earned ratio, all these ratios. All the ratios, none of them do you need to memorize. It might be helpful on Wednesday when we go through this that you bring the exam reference sheet with you, because we're going to be going through a lot of ratios, and it's helpful to have them written down what they are instead of just the dollar amounts. You do not need to memorize any ratios for the exam. You do need to be able to interpret them, certainly compute them. So what we're doing on Wednesday, the rest of our time together, our last class, is we're going to talk about the final again, so I apologize for any redundancy. I just want to make sure everyone understands what's going on with finals and final course grade. And then we're going to do ratio analysis the rest of the day on Wednesday. So that's all I have for today. You close this question, right? Okay, so have a nice day, and I'll see you on Wednesday.